Assalamualaikum warahmatullahi wabarakatuh. And hi madam, my name is Muhammad Aiman Arif and my group mates are Muhammad Nafis Iqbal, Muhammad Nazirul Hanif and Nurul Nadia. Our group assignment is based on company Rubberex Corporation and Berhad. Rubberex was founded in 1996 based in Ipoh, Perak, Malaysia. The main activities are rubber product manufacturing and management of companies and enterprise. Rubberex is engaged in the manufacturing and sale of household, industrial, professional, and disposable rubber gloves. The top executive of this company is Muhammad bin Hamzah, Deputy Chairman of the Board, Mustafa bin Muhammad, Independent Non-Executive Director, Chin Lenko, Managing Director, Shi Mei-ying and Lei Kim Chong, Company Secretary, Cho Men-cho, Non-Executive Independent Director, Chi Blip-ling, Executive Director, and lastly, Tong Koi-teo, Independent Non-Executive Chairman of the Board.
For the current ratio, Rubberex has 2.80 times, while the industry average is 2.23 times. This ratio means that for every 1 ringgit of current liabilities, Rubberex only has 2 ringgit 18 cents of current asset as a backup. Next is asset test ratio. For the Rubberex company, it is 2.04 times, while the industry average is 1.57 times. This ratio shows that Rubberex has enough assets to cover its asset at its maximum capacity. The possible causes of this ratio might be because of overstocking and because of the choice of its source of financing. For the suggestion to improve this ratio, the company can adopt an effective inventory control system and manage current liabilities effectively. Next is leverage ratio. For the debt ratio is 23.97%, while the industry average is 29.70%. This ratio shows that Rubberex has lower borrowing than the competitors. Next is debt to equity ratios, which is 31.53% and industry average is 29.48%. The Rubberex company used more equity and less borrowing compared to the competitors. Lastly, is for the leverage ratio is time interest earned, which is 7.52 times for Rubberex company and 6.15 times for industry average. This ratio shows that Rubberex's ability to fulfill its interest obligation is better than the competitors. The possible causes of this ratio because the company might borrow more than necessary. For improve this ratio, the company should have an optimum of mixture of sources of its finance. Next is should not take additional debt if it is not necessary and the ratio is highly leveraged.
For gross profit margin, as we can see, current ratio is 44.84, whereas industry average is 27.46. For the current ratio, it is showing that in each RM earned will bring 44.84 cent in profit. Okay, as we can see, the current ratio is higher than industry average. Indicates that the company have the ability to sell well above the cost of production. Okay. For the operating profit margin, as you can see, current ratio is 8.3, whereas industry average is 60.62. It shows that the company have lower current ratio than the industry average. Okay, this shows that the company has not efficiently converting revenue into profit. Compared to the industry average, company may be underpricing about its product. Okay, for net profit margin, as we can see, the current ratio is 5.19, whereas the industry industry average is 12.82. Okay, 5.19 indicates that in each RM earned, it will bring 5.19 cent of actual profit. Okay, the company is not achieving, as you can see, the company is not achieving the industry average. Okay, this shows that the company has not efficiently converting sale into actual profit. Okay, this is might due to the lower volume of selling goods, lower pricing. Okay, the company is not achieving average industry average standard for industry. This is might caused by the lower volume of selling good, lower pricing, and inefficient management. In order to prevent or to increase the ratio, company should reduce the cost of production, increase the volume of sale, and increase its pricing. Is for return on asset. Okay, the current ratio is 4.21, whereas the industry average is 13.74. Okay, the company have 4.21% of return on asset ratio. This indicate that company will earn 4.21% of profit based on their investment in asset.
Lastly, for the return on equity, as we can see that the current ratio is 5.53, whereas the industry average is 18.36. Okay, 5.53 indicate that in each investment that a commercial they invest for the company, they will earn 5.53 of profit based on their investment. Okay, as we all can see that the company has lower current ratio than the industry average. Okay, the lower current ratio than the industry average can be caused or indicate that the company may be mismanaged or could be reinvesting in the unproductive product. Okay, a high ROE or return on equity ratio show that the company have a good utilization of equity capital. Okay. In order to increase the ROE ratio, the company can increase their profit margin. Okay, increasing the profit margins not necessarily came from increasing volume of sale. They can increase their prices for each product or lowering the cost of goods sold.
I will explain about common source ratio of Rubberex Corporation and Berhad. Firstly, this is trend analysis. For calculate the trend analysis, we must use formula. There are two types of formula for non-current asset and for non-current liability. For non-current asset, we must divide total non-current asset with total asset and multiply 100. For non-current liability, we must divide total non-current liability with total liability and equity, and we must multiply 100 to get in percentage. Okay, this is analysis of non-current asset. For property, plant, equipment, it should increase 17.17%. It could be the company bought for new PPE, such as machinery for production process. For the prepaid lease payment, the trend also increase. Could be the company want to lease the payment when it might have many cash. Okay, this is analysis of non-current liability. For borrowing, the result show decrease 4.07%. It could be the market of interest rate very high of the year of that year to apply loan. Lastly is deferred tax liability. The deferred tax liability should increase. It could be the revaluation of revaluation gain and depreciation of fixed asset. So it made the company to pay the deferred tax liability. Okay, thank you.
So, as conclusion of our group assignment, as we know from analysis above, performance of Rubberex Corporation and Berhad is quite impressive. It because the analysis show the company will grow every year, although have liability needed to be done. Then we can know about non-current asset and non-current liabilities for the year 2018 and 2019, either increase or decrease, and how much companies spend the money on non-current asset and non-current liabilities. After that, as the liquidity ratio above, it is better than the competitor because they could meet the ability to settle the short-term obligation. Rubberex use low leverage as compared to the competitor, which is low risk. I think that's all from us. Thank you, madam.